that whole corporate credit cycle, I don't know, tell us if you think it's going to pick up. The RBI is saying don't go overboard with this unsecured whole retail loan credit card business. So if I'm an investor and I want to buy in to ride that next wave of bank growth or NBFC growth, then what am I looking at? Which sector is going to drive it?
I think it will be a combination eventually. It will be a combination of both household as well as corporate credit. And I'm not even considering, when people ask about capex cycle, and the memory always goes back to 2003, 2000 and maybe 10 or 12, depending on how you want to look at that period. That was not a capex cycle. That was a once in a lifetime super capex cycle.
Wow.
I don't know if I will ever see something like that again.
You don't see that coming back?
It was very unusual. There was a confluence of global and local factors which made it possible. I don't know whether it will happen again in my lifetime. I'm sure it will happen again at some point, but that was very, very unusual. But if you're talking about a regular capex cycle as different from that super capex cycle, I think it is already some signs of that are there. And remember, corporate India has also learnt its lessons. So neither do they have a desire to go overboard. And honestly, we as investors are equally cautious. So, if companies really come to us with very large capex plans, we're like, hold on, why are you doing this? Why are you putting the enterprise at risk? But that is not to say there is no capex happening. It's certainly happening. And I think many of the policy initiatives which are targeted at sort of raising the share of manufacturing will lead to a slight pickup in capex. And those will lead to the creation of organized sector jobs. When individuals have visibility of their income coming in, that makes them good credit for the banks. That gives them the confidence to be able to go out there and borrow, because you now have a visibility of a cash flow stream coming into you. So I actually think the setup is very, very good for sustained growth in credit. And again, we are not talking about credit growing at 20% in a nominal GDP of 10%. But can it grow 10 to 14% as GDP expands? I think it can. And that's the simple play that we are looking for. So we are not looking for that once in a lifetime
super
boom.
Cycle.
Yeah, no super cycle.
Okay, got that. So banks are a yes for you, PSU, private sector, or both?
Yeah, so that's an interesting question. And I just want to highlight one thing over here. And I was looking at the data. If you look at the last decade, right, the PSU banks have had to raise equity of 4.5 lakh crores to recapitalize themselves to be fit for business.
We all remember that time, 2016-17.
The private banks over this decade have raised about 1 lakh crore, right? Then you look at what's the kind of profitability that these banks make. In 23, these PSU banks, which put together had to raise 4.5 lakh crores of equity to recapitalize over a decade, made a lakh of profits. The private banks, which raised 1 lakh over a decade, made a lakh and 70 in a single year, right? So my simple point is that the private sector banks, not every one of them, just like it would be unfair to say that every PSU bank doesn't have the capability to generate ROA, but the ROA of many of the private sector banks is superior. What it means is their ability to absorb credit costs is superior, and that's a very important point today, Surabhi, because underlying my bullishness on BFSI is that credit will grow, but at some point even credit costs will start to go up. And when credit costs start to go up, you need a bank which has the ability and the cushion to be able to absorb those credit cost hits when they come. And I think over there, the private sector has demonstrated a lot superior track record. But I honestly think of the banks today as the big six, which is 1 PSU and 5 private. And I think they've all got metrics which give us a great deal of confidence.
Thank you for watching CNBC TV18, and do follow us on all our social media platforms for news, updates and more.